Shouldn't be too hard to guess, but I'm going to share my recent real estate purchasing experience in the next video. In the meantime, have a look at this clip. Very interesting times.
There are more signs today that it's becoming a buyer's market in Sydney, with the auction clearance rate on the weekend the lowest it's been for years.
A growing list of suburbs is also emerging where vendors are prepared to sell at a loss, but even so, buyers still aren't buying.
If you have a buyer's hat on, it sounds too good to be true.
We're still seeing 51 unit markets where values are below their record highs 6-7 years ago.
Yes, that's right. Huge chunks of Sydney that peeled off the property rocket ship while the rest of the market launched into the stratosphere. Epping down 18.4%, Beecroft down 16.5%, Sydney Olympic Park almost 15%, Granville and Marylands 12%.
Vendors are willing to sell their properties at a loss in many instances, but they're just not very popular with buyers.
But of course, this is Sydney, so there's a catch. These suburbs share a common characteristic: high-density blocks, too much supply, driving value down. Buyers all too wary of bargains.
Many of them came with defects, which created a kind of crisis of confidence among buyers.
Think Opal Tower, new big builds that favoured quantity over quality. It turns out there's a lot more to the Sydney market than simply flip and sell. Buyers actually want to live somewhere long term.
We need to think about medium density builds and units with outdoor space.
Sydney hasn't been this fussy for a couple of years. Last weekend's clearance rate was just 62.7%, with a measly 524 homes on offer, the lowest rate since December 2022. Tom Saker, 7 News.
New research has discovered a number of Sydney suburbs where people don't want to buy, even though sellers are willing to drop prices. Eddie Meyer explains.
Sydney's median house price might be at a record high, around $1.6 million, but some units are struggling to sell. CoreLogic has identified a number of suburbs where buyers aren't biting. Epping tops the list. The current median price for an apartment is just under $800,000. That's down 18.4% since May 2017. Beecroft has seen a 16.5% decline since October 2017. Sydney Olympic Park down 14.8% since June 2017. Granville down 12.8% since September 2015. And Maryland's 12.2% lower than October 2017. Now, while this isn't great news if you're an owner-occupier trying to sell, it's less troubling for investors willing to hold on.
There was a period there where I guess the Sydney market had an oversupply of units, but certainly there's been demand, particularly from tenants for that side of the market. Vacancy rates are still very low for units in Sydney, just 1.7%, and we have seen strong rental growth.
So if Sydney is the home of apartment living, why aren't buyers buying into these more affordable units? The suggestion is they're wary of defects or turned off by high-density living and the relatively small size of many of these apartments.